Greetings, eco-conscious investors and tech enthusiasts. Welcome to Stocks Telegraph. The electric vehicle revolution is upon us, and with it comes a critical question. Is the infrastructure ready? ChargePoint Holdings Incorporated, trading under the ticker CHPT, is a leading player in the EV charging game, and their stock is generating a lot of buzz. But should you invest in ChargePoint? To answer that, we need to delve into the future of EV infrastructure and analyze ChargePoint's position in this rapidly evolving landscape. So buckle up and join us as we explore the electrifying world of EV charging and the potential investment opportunities it presents. The transportation sector is undergoing a seismic shift. Electric vehicles are becoming increasingly popular, driven by environmental concerns, technological advancements, and government incentives. This transition presents a massive opportunity for companies that can provide the essential infrastructure, EV charging stations. ChargePoint is at the forefront of this movement, offering a comprehensive network of charging solutions for homes, businesses, and public spaces. But is ChargePoint just a trendy company, or is there a solid investment case to be made? Leave a comment below. Are you bullish on the future of electric vehicles? What role do you see EV charging companies playing in this revolution? We'll analyze ChargePoint's financials and explore the exciting, yet challenging world of EV charging infrastructure. Stay tuned. ChargePoint is currently trading at $1.39, with analysts' mean target price exceeding $2.83. This suggests a potential upside of over 100%, which is certainly attractive for investors seeking growth. While the company isn't yet profitable, it's experiencing impressive EPS growth, with a projected 53.66% increase this year and a forecasted 41.17% growth next year. This indicates that ChargePoint is on the right track to achieve profitability in the near future. The company is also demonstrating strong quarterly earnings growth of 25.22%, further solidifying their financial trajectory. The EV market is expected to experience explosive growth in the coming years. This translates to a significant demand for EV charging stations, which bodes well for ChargePoint. The company is well positioned to capitalize on this opportunity with their established network and commitment to innovation. The EV charging infrastructure landscape is still evolving, and ChargePoint faces competition from established players and new entrants. Additionally, the profitability timeline for ChargePoint remains uncertain. Investors should be aware of these challenges before considering CHPT for their portfolio. Now, let's delve deeper into some recent developments and see how they impact ChargePoint's future. ChargePoint reigns supreme as the top builder of EV charging stations in North America and Europe, boasting over 1 million charging points. Their comprehensive network caters to a diverse clientele, from retail businesses seeking to attract customers with EV chargers to residential users and companies managing electric vehicle fleets. Following their public debut in February 2021 through a SPAC merger, ChargePoint set ambitious growth goals for the next 5 years. Unlike many SPAC-backed companies, ChargePoint surpassed their own projections in fiscal years 2022 and 2023. However, their momentum stalled in fiscal 2024. A sluggish EV market and a challenging macroeconomic climate forced many companies to tighten their belts, impacting ChargePoint's growth trajectory. Currently, ChargePoint generates most of its revenue from selling chargers, often at a loss, rather than their higher-margin subscription services. This needs to change for them to achieve long-term profitability. The company recognizes this and is actively working on expanding its subscription services and resolving inventory issues. Additionally, ChargePoint is strategically growing its manufacturing operations in Asia to capitalize on future market growth. ChargePoint acknowledges the headwinds they face, but remains optimistic about their future. They anticipate business stabilization in the second half of fiscal 2025, fueled by subscription service growth, improved inventory management, and a resurgence in the EV market. Furthermore, they project positive adjusted EBITDA in the fourth quarter of fiscal 2025. Analysts predict only a modest 2% revenue increase for ChargePoint in fiscal 2025, with an adjusted EBITDA loss narrowing to $108 million. While the growth rate seems uninspiring, ChargePoint stock trades at a low valuation, potentially limiting downside risk. However, the company needs to overcome near-term challenges and achieve profitability to unlock its full potential. Just recently, ChargePoint announced a strategic partnership with South Korean electronics giant LG Electronics. This collaboration aims to expand both companies' reach in the global EV charging market. The initial phase involves integrating ChargePoint's secure, U.S. government-certified charger management software with LG's EV charging hardware. Deliveries are expected to begin later this summer. The ChargePoint LG partnership extends beyond hardware integration. The two companies envision combining ChargePoint's EV charging systems with LG's energy storage solutions. Additionally, they plan to integrate LG's ThinQ smart home platform with ChargePoint's HomeFlex residential charger. These innovations have the potential to revolutionize the EV charging experience for consumers. ChargePoint CEO Rick Wilmer emphasized the shared commitment to providing a world-class charging experience for all EV drivers. This partnership leverages the expertise of both companies, ChargePoint's software prowess and LG's hardware and smart home technology leadership, to develop cutting-edge EV charging solutions. The LG partnership presents a significant positive development for ChargePoint. It strengthens their market position, broadens their product offerings, and underscores their commitment to innovation. This collaboration could be a major catalyst for ChargePoint's future growth. Before we wrap up, let's revisit the question: should you invest in ChargePoint? We've analyzed the challenges and opportunities, the recent slowdown, and the promising partnership with LG. Leave a comment below. Does the LG partnership make you more bullish on ChargePoint? What other factors would you consider before investing in CHPT? The future of transportation is electric, and EV charging infrastructure is a crucial piece of the puzzle. ChargePoint Holdings Incorporated is a leader in this space, boasting a dominant market position and a comprehensive network of charging stations. While they've faced recent challenges due to a sluggish EV market and economic headwinds, ChargePoint remains focused on long-term growth. Their commitment to expanding subscription services, improving operational efficiency, and strategically growing their manufacturing positions them well to capitalize on the inevitable resurgence of the EV market. The recent partnership with LG Electronics is a game-changer for ChargePoint. This collaboration leverages LG's hardware expertise and smart home technology, with ChargePoint's software leadership and market reach. Together, they have the potential to develop innovative EV charging solutions and significantly expand their global footprint. Thanks for joining us on Stocks Telegraph today. We hope this in-depth exploration of ChargePoint has been informative. If you're interested in the future of electric vehicles and the potential of companies like ChargePoint, give this video a thumbs up and subscribe to our channel for more insightful investment analyses. Until next time, happy investing.